like to think of Ethereum as the oil and Bitcoin the gold.
This is Rebecca. Hey, thanks for joining us on the Mama Lorian Way, where we talk about finances and entrepreneurship for the whole family. Super excited to have a guest today, Carlos Benavides, who I actually met, I think we met like 12 years ago when we were babies.
Yeah, 12 years for sure.
Babies, working on a TV show, Friday Night Lights. And Carlos is one of my favorite kind of people who has reinvented himself and is an innovator and an early adopter in the world of Bitcoin, cryptocurrency, and DeFi. And that's what we want to talk about today. So welcome. What is it that you do and how did you get your start?
Well, I got my start with pretty much everything. It was 2016. I think Bitcoin had been going on for like, probably like 6 years at the time then. Mm-hmm. And everybody was talking about it. And I was like a super doubter, I was like, what is this digital token? It's not real. And it just took just a few minutes of reading to get the concept of what is going on. And it actually filled a void within my life because a lot of things were weird, at the time. It was like, wars, and we had just come out of 2008, 2009, and all this stuff with the market crashing and, money being used as a weapon and all this stuff. So like when I started reading about Bitcoin and what sound money was and what it was trying to accomplish, I got super excited and got full throttle into it. And actually, one of the things that I started doing was mining. So that was what I got into immediately. And then when I realized I couldn't mine Bitcoin because the difficulty was super high, I started figuring out other things to mine and how to get it. And I really like the idea of investing into something and then also securing the network at the same time. So, and that's what mining does.
Okay.
So, really
so this is where you're like talking expert level. And then where we like a lot of times we get real deep into something and get excited. We look at it and we're like, oh, everybody knows everything that I'm talking about. And I'm totally guilty of that. So I want to go back just for a moment. And what is cryptocurrency, whether it's Bitcoin or Ethereum? And even just me saying those two things, some people might be like, what are you talking about? So what is cryptocurrency is a broad thing?
Well, cryptocurrency is based on blockchain technology, which is basically an encrypted distributed ledger, which every single transaction and every single thing you do on the blockchain is like forever on there. And when you have miners, which you can imagine people mining for gold and then finding like a big thing of gold and everybody gets the reward, the guy that brought the shovels, the dude that brought the trucks, and everybody gets a piece of that reward because we jumped into the pool. It's a similar concept. Okay. And so what the computer does is it runs these mathematical, it's based on math. And once it figures out these certain encryptions, it opens up a block, and then everybody in that block gets the reward. The point of that is to confirm these transactions so that things can't be double spent, so that things can't be changed. They're immutable. So that's the benefit of mining. Mm-hmm. And that's basically mining. Yeah.
Mining. So you have like a lot of people, and as I understand it, and correct me where I'm off, a lot of people working all over the world, maybe just on their own computers or maybe in a just think of like in a Russian basement with all the Russians hacking it. Yeah. They're all looking for the solution to a particularly difficult mathematical problem, right?
Is this right? Okay. Right. And there's a finite amount of Bitcoin to be rewarded to these miners, but miners are incentivized to mine the network because of their reward. And that cycle secures the network because once you reach a certain point, I think every 4 years, the difficulty of Bitcoin increases. When the difficulty increases, you got to get more powerful, more computers, and then more powerful computers. You got now states involved, you got governments involved, and it just becomes bigger and bigger and bigger and bigger. It's like blooming.
So what's the top number? There's the top number of Bitcoin that can be
21
mined.
million.
21 million?
Yeah.
So it's kind of like having like gold. We keep finding more gold or
Right.
even recycling. But at that 21 million point, there is no more Bitcoin to be had. So is
Correct.
that what makes it a valuable resource?
Yeah, based on supply and demand. Just there's many things about Bitcoin that are so simple, and there's many things about it that will just make half the price go up over time. Supply, demand.
You're actually famous for a quote. Do you know what quote you're famous for?
Not at all.
I have my sources.
Okay.
It's not about crypto, it's about DeFi.
Yeah, decentralized finance is the way to be. It's the way to feel the most free, and it's the way to be the most free rather than just feel the most free. You're actually free. One of the things that I've been talking to people about lately is the beautiful thing about being able to go to zero, and we'll get into that, whenever you want to, but being able to take risk and just be able to fall to zero is beautiful because you can always start over. A lot of times we take risk in the financial world, and if we fail, we owe somebody money.
Oh.
So in DeFi, you won't owe anybody money. It's all you. So if you fail yourself, you owe nobody money.
Okay, hold that. I'm going to say hold that. What's DeFi? What is it?
DeFi is decentralized finance based on smart contracts on platforms like Ethereum, Polkadot. I'm not sure if they have much DeFi. I think they do actually. Polkadot, Binance, Smart Chain. What else? Cosmos. I think Cardano's about to start up with some smart contracts here pretty soon. But the main thing is Ethereum, and everybody's trying to be a better Ethereum. But Ethereum's the way is pretty much number one. I mean, you got tons of developers, you got all the concepts on Ethereum. That's pretty much what I use in DeFi. And if we can get into that, I use Compound, Maker. Those are the decentralized protocols that I use. And decentralization, first of all, for anybody that wanting to get into crypto, decentralization is the key to anything.
Go to like the third grade level. What does decentralization mean?
Well, for example, we have a centralized authority running our monetary system. There's like 80 central banks across the world right now, and they're in control of everything. You make $10 and you're like, I made $10 and I saved it. Mm-hmm. And then the central banks are like, well, now it's worth this because we just printed a whole bunch of money out. That's centralization. Decentralization would be that a person running the network would have to propose a poll, for example, and then everybody involved in the protocol will have a say-so into the changes made. Right now, that's maybe Congress, the House, the Senate, and a lot of those people are sadly not really in it for your benefit. And so the thing about decentralization is you can vote on your benefit. And a lot of people will, let me get back to this. What I mean about voting is when you join Compound or Maker, which run on the Ethereum network.
What are they? Are they like exchanges?
They're decentralized. They're decentralized lending platforms. So let me explain. So say you have a bunch of Ethereum or crypto, for example, whatever crypto they accept. They accept crypto as collateral. Once you have a collateral, they set a certain collateral factor of maybe 50 or 60% of what you own. So say you have a few Ethereum worth at like $20,000, right? So you can take that, put it into Compound as collateral, right? Supply the network with Ethereum. Now, when you supply a network with Ethereum, you also generate a governance token. That governance token for Compound specifically is Compound token. With that token, which also has a value in US dollar, right? That token is a governance token, which means that when Compound wants to, or when everybody on Compound wants to propose something, that governance token is your voting power.
Mm-hmm.
You can delegate your votes to someone else, or you can vote on yourself. So imagine you go to Bank of America and you get a loan from them, and they say, hey, since you have a loan with us, we're going to give you this Bank of America position because you have a loan with us. And anytime we want to change something in Bank of America, you get to vote on it as long as you have debt out with us. Or because basically, banks right now, they create money out of thin air by way of car loans, any loans. They don't have money in the bank. They're typing it in. When you go to buy a car, they create a bank account in your name, and you are now paying into that account, with interest and all that stuff. That's how they create money. So you cannot do that in decentralized finance. You cannot create money out of thin air. What you can do is use your own money to your benefit. Now, the issue is with crypto is that it's super volatile. So you take Compound and this is why you have collateral factors of 50 and 60% and not 80% or 90%, based on the volatility of the asset itself. Because what happens is it's a smart contract that's involved. So say I have a bunch of Ethereum and an Ethereum tanks, but I had 60% collateral factor on there. So what happens is when the money that I borrowed starts to equal the money that I put in, it immediately collapses and I'm zeroed out. I'm completely out. I'm liquidated. I'm at zero.
That's what you were talking about, being at zero.
Yeah, and that's worst case scenario. Is that you go to zero. So right now I could take $20,000 worth of Ethereum, take 50% of that out, and take $10,000 worth of US digital currency, or what is it? USDC.
Yeah. So that's a stable coin, which means for our viewers, it's $1 is $1. $1 stable coin is $1 US.
Yeah. So you take USD, or you can borrow Ethereum, but they all have different interest rates. So I'll take out USD, for example, and go look at the market and see, I want to bet on some speculative DeFi plays that I like, that are doing stuff with liquidity provider tokens or whatever. And I want to go ahead and invest. So you do that, and you take it out and then you invest. It goes up, it goes down, you take that risk, but all the while it's your risk. There is no middleman. It's permissionless. Okay. There's nobody telling you can or can't. There's no credit check, and there's no citizens rating. It's based on your own wealth and your own value, and you can do it. So somebody with $1,000 can loan themselves $500 and make some speculative plays. And if they lose, and if shit tanks, excuse my language, if the market crashes, they go to zero. They don't take a small payday loan and then have to pay 24% back forever, and then decide go bankruptcy, ruin their credit, all that stuff. It's what we're living in now in the modern financial world is not working for anybody. It's working for a few people. It's not working for us. Crypto is working for us because it's how much you want to do in crypto, how much you want to do for yourself.
What if somebody was, and I know no financial advice here, as that little disclaimer, the down below, we're just talking this. If somebody said, hey, Carlos, I got $1,000, where should I put it? What should I do? I
would say acquire Bitcoin. I would say
especially right now, because what happened last night?
What happened last night is we're in a dip.
Yeah.
And
what does that mean?
Crypto is very volatile. So, and the reason is because there's not that many left. And a lot of things is that people ask questions, Carlos, if you have $1,000, where do you want to put it? And then I tell them to put it in a token, and then they have no foundation of self to keep it in there, right? So what I tell people is buy Bitcoin if you really want to save your money. And it's not even about saving money. It's about keeping money.
Mm.
You know, it's keeping your value. It's a store of value. And people are like, well, how is Bitcoin a store of value when it goes from 65,000 to 55,000? Well, over time, you know, it grows 200% a year. You know, I'd rather have a highly volatile asset that grows 200% a year than something that I'm getting like 1% if I'm lucky. Like anybody that's watching knows that their savings account is doing nothing for them. But what I would say is definitely educate yourself before you make any sort of moves. I know a lot of people have fear of missing out, FOMO right now, and they just want to jump in and they don't want to learn about crypto. They just want to ride the pump. But the problem with that is they're going to pull it out and they're not going to be able to catch a pump. And they're only going to buy highs and they're going to sell low. They're going to sell low and they're going to buy high over and over again. I kind of like, I don't know if anybody's into fishing, but I have an analogy where it's like, you have a lure and you're like, that's a lure. And then you reel it in. You're like, I don't like that lure. You take it out, you put another lure on, you throw it out there. I don't like that lure. Instead, the one guy that believed in his lure, that left it in the water all day, is going to catch a fish.
Yeah.
You know, so it's a long game, and knowledge is power. Because if you get the knowledge and you understand the concepts of why crypto and why decentralization is so important, you're going to ask yourself, crypto's dipped today. Bitcoin has made a 30% dip today. Ask the question, has anything changed? If the answer is no, then you buy more. You dollar cost average in. That is the best way. That is the best way, especially for new investors.
You know, I woke up this morning to there was a dip and I was like, oh, I was asleep. I'm not that savvy enough to like say, hey, buy when it goes down to this. But now I'm going to set it. Yeah, I'm going to set it because I was asleep when the dip really happened.
For sure. Because it trades 24/7.
24/7. And I have a friend who's a trader and she's in Seattle, but she watches the Asian markets a lot. So she's like, I got my bell that rings at like 2 a.m. She's like, I gotta get on like a trade.
I love that. Korea, you know, Japan.
Yeah, I get up. We get up real early here, and I'm always checking what it is at 5 a.m. because it's a little bit different than when it's at like 12 p.m. here.
Oh yeah.
So you said something got dollar cost average. What does that look like for you?
Well, I'm not a trader. I know that I think you know, a very small percentage of traders actually beat the market as far as like long-term holding. So what I do is I'm really into a project. I want to get into it. I want to use it, but it's at an all-time high. You know, what am I going to do? Well, especially with Ethereum, like Ethereum's at all-time highs, you know, you know, every now and then this year, it's like, boom, another all-time high. Well, you need to use it though. You need Ethereum to run on the network. So what you do is you buy Ethereum because you've learned about it. And then if it goes down, you don't put all your money into it. You know, you say, I have $1,000 to invest this year, right? You start off, you put $250 in Ethereum, you use the network, you use these protocols, and we'll talk about fees right now too, because fees are insane. You learn about it. And then it goes down, you put it in. It goes up, you put it in. You set goals for yourself every week or so, or every month. Or I have a guy at work who's been buying $10 worth of Bitcoin every day since 2017. He bought at the top at 20,000 and he never stopped because nothing changed for him. He still believed it. $10 every day. Now he's on top.
So, yeah. That's my dollar cost averaging too, is about $10. Maybe not even every day, but there's moments, there's triggers that I'm like, okay. I even bought at 63.
Well, a lot of people they're scared to miss out. So like they want to put all their money in. They want to take out loans. They want to do all these things, and they want to dump into Dogecoin. You know,
and I wanted just a real Dogecoin for like, like my
well, that's cool. It's a meme coin, and
it's a meme,
and that's a thing.
And we love Doge, like not the Dogecoin, but we like Doge in our house.
Yeah,
because he's so cute.
I think maybe the reason Dogecoin is exploding is because the barrier to crypto is pretty hard. I mean, it's not hard for tech savvy individuals or maybe even younger generations, but For older generations, it's hard. So instead, they get on Robinhood. Dogecoin's right there. They could just press buy. They don't care about fundamentals or tech or what Dogecoin does or anything like that. But what I like about it is that when they get gains and they get excited about it and they hold and stuff like that, a lot of percentage of those people that buy Dogecoin are going to extend their knowledge into other aspects of crypto and learn and be part of the ecosystem. The problem with Robinhood is that I think it's hard to get your Dogecoin, because if you have the app, you actually don't have it. I think you have to, this is just me asking other people because I'm not on Robinhood, but I don't think you actually own your crypto. So
I don't know. I didn't know you could buy crypto on Robinhood, but you can't. I mean, you've got it. It's still, no matter what, it's still on an exchange of sorts. So you're not downloading it into a hot wallet or a cold wallet, and you can explain
exactly
what those are. But it's just on the exchange, right? I don't know about
exactly.
Robinhood, but
Yeah,
that's what it sounds like.
not yours. It's part of a centralized authority, which is not where crypto, which is what crypto is trying, which is what crypto is trying to be, is decentralized, trying to get away from centralization.
Do you know anything? This is totally way off topic. Do you know anything about taxable events?
Yeah, if you buy and you don't sell, you don't have to pay any taxes.
And when you go and you're basically loaning to yourself, like you talked about, is that taxable event?
I think that it is, especially when you make gains, but you have to put everything down. You know, you took the loan, you paid it back, you paid these fees, you put all those fees down, and you know, there's no regulatory clarity on it. There are some rules. I think they treat Bitcoin right now like a Mona Lisa painting. That's what it is. It's a digital asset. You know, it's not a currency. If it was a currency, we'd just be dealing in currency law. But they're going to have to make new laws for it. Yes, report your taxes, report your gains, because, you know, before they're making laws, they're already trying to figure out how you're a criminal. It's silly. It's silly. But yes, pay attention. There are ways to be extremely private with your crypto holdings, but I don't think it's going to be good for the long term. You know, because you're going to want to realize those gains at some point, and then when you do, the IRS is going to be like, you got a lot of gains.
Yeah.
Yes, there's a lot of taxable events. One of them is converting from crypto to crypto, buying with crypto, which is interesting because I know Miami-Dade County in Florida has now started to accept tax payments with Bitcoin. The problem nobody's talking about is when you pay in Bitcoin, you take a capital gains loss, or you get capital gains tax.
When you pay with Bitcoin, you take a capital gains hit, is what you said.
Yeah, which is silly.
Which is silly because you've just exchanged it. And then when you buy crypto with another crypto, because there's definitely tokens and coins that you can only buy like with Ethereum coins or Bitcoin, or that is a taxable event.
Yes. Yes.
And who is keeping track of this?
Nobody. there are, I don't know, I don't want to sponsor anybody right now, but there are a few crypto tax services that I think they require your key API key, and they just get in there and they do a lot of that work for you. And then you can go in there and decide that was just a transfer. I didn't spend that. I just transferred it. You know, I don't think there's a fee for transfers. And that was a swap. And then you can, you know, pick and choose which ones are, you know, the ones that are taxable events.
When I go in and buy my Bitcoin at $10, you know, whenever, the cost basis changes every time. Where is that being kept track of? Do you know?
You have to keep track of it. Yeah. I don't think that Coinbase is sending out, you know, all your transactions and stuff. They used to email that to you. I think that you pretty much have to keep track of it.
It even just only came on my radar that I might have to think about that.
This is what I put in. This is what I got out. This is what I owe you. Like, so like basically all I'm doing is reporting my gains, all the little things in between. It's like, if you tax me for every little thing I did, I'd have no money left. Like,
so confused.
So yeah, here are my gains. Here's my tax rate. So So that's what I've been doing.
So you also referred to something about like the fees are insane right now.
Okay, so Ethereum network is still very new. So when it goes up in $250 billion valuation, I'm just like, man, are we too high right now? Is it too much of a bubble? Because to use the network, the fees are insane. It's clogged up. So the higher fees are getting mined first, because Ethereum right now is in the process of moving from proof of work, which is mining, to a proof of stake sort of way of being. And what that's going to do is going to take away all the miners out of it. And then you're just going to be able to stake on a Ethereum node, or Coinbase I've already staked Ethereum 2 on Coinbase. Ethereum 2 is an improvement to the current Ethereum protocol, which is going to make the fees much less. Also, there's an Ethereum improvement protocol 1559, which I think is going to happen in June or July. It's going to take the transaction fees that it takes to use the network and burn that. So Ethereum will eventually become a deflationary asset, which is also excellent, because if you're holding Ethereum, that's good for you. Back to the fees. It's really expensive right now. So when everybody starts to use Ethereum, the network gets clogged, And so miners are like, well, we're just going to do these, we're going to take major fee. You can set your fee really low as far as a transaction on the network, but it's going to take forever to get your transaction through.
Okay. So because I have a little bit of Ethereum, I have Ethereum and it's still on Coinbase Pro, because the fee to get it off into my ledger,
it's like $100, like $50.
I know. And it's like, it's a minuscule amount, it's like going to McDonald's, how much I have. So I left it there because I was like looking at it saying, is this right? Is this
right?
And that is something you say is probably going to be solved in the next few months.
Totally. They're working on it. You got developers, you got users, everybody's screaming at Vitalik Buterin to get Ethereum improved. But it's so cool. I mean, right now is a good time to accumulate it, because you need it. I like to think of Ethereum as the oil and Bitcoin the gold. Use oil for everything on this planet. Clothes, toothbrushes, plastics, cars, everything. And that's what Ethereum is. It's the oil. It allows people to sell their art. It allows people to loan themselves money. It allows games to be played, and NFTs, all that stuff. And sadly, it's expensive right now, but that's the price of decentralization. So you have Binance, for example, which is a huge one. They're faster, they're feeless, they trade tokens, they do all that stuff, but they're centralized. And so centralization is always going to be faster, more efficient than decentralization. And hopefully that'll change when we get more users to the network and things improve.
Binance, they do something called a burn. What is that?
They do token burns, yeah.
What is that?
Well, I'm not sure how Binance determines how they burn their tokens, but they basically had a max supply of tokens that they came out with in their Genesis blocks, and they are now burning those
to keep the value. Why would you do that?
That's pretty much what you would do that for. Yep. I'm not really into Binance that much. I used to use them a lot, but they became illegal to use in Texas, so I stopped using them.
Is it just in Texas?
I don't know why it's in Texas, because we're able to trade on other platforms and other tokens. So I'm not sure why Binance .us, which other states can. We're in Texas, by the way. But yeah, so I stopped using it, and I know that they were doing token burns and stuff like that. I'm not sure why. Definitely will it increase the price? Absolutely.
Yeah. I know, we talked a little earlier, and you said something about people that fear of missing out, and then the older people, because we're probably still in the early adopter phase of, the innovators, early adopters, late adopters, laggards curve. And we're probably in the early adopters still. But you said that you've got, we know who they are, the older guys on set that are like, do it for me.
Yeah, they want you to do everything for them, and all they want to do is press the buy button.
Yeah.
And this is how people get scammed. You know, I had one guy offering to give me like, you know, 100 grand. He's like, I'll just throw you 100 grand and you can buy with it. I was like, man, this is how, no, because as soon as I do it for you.
Yeah, your power is gone once you've given up your pursuit of knowledge to somebody else to do it for you.
Absolutely. And I think what you were saying earlier was that the barrier of entry, the being hard, is a good thing. I think it is. And I think bear markets are a good thing as well, but especially not for people's money, but just that the market gets to cool down, things get to improve, developers get to work. It just becomes better and better. And it has become better every year. And it's hard to fathom like what it's going to become, because nobody that ever, somebody that invented the internet could not fathom what it was going to be today. And that was somebody that invented it, you know? I'm not sure who it was. I think it was like
Al
CERN.
Gore. It was Al Gore.
That's right. That's right.
Goes old Al. Well, that's how I
so underappreciated.
I got the trigger that switched with me to say, I think the DeFi and crypto may be something to start paying attention to, was somebody said something like that, was like, it's like the internet, but before we understood what it could do. And I even remember like in the 90s thinking, how are people going to make money? How are these websites going to make money?
Yeah. Chocolates.com. Like people were selling chocolates.com and making a ton.
Yeah.
Like I think one of the companies that blew up at first was Netscape or something like that. Like where's Netscape now?
Yeah.
You know, you don't know. So you don't know. I mean, and a better Bitcoin can come to play. But the thing about being a better Bitcoin is what makes Bitcoin good is the network. It's highly secure. You know, and the problem with the bad news that we had today was that we lost a huge chunk of hash rate from a power outage in China. Now, what that brings to light and what also needs to improve is the decentralization of mining companies. And so we need more mining in the US. We need more mining in Africa, you know, stuff like that. And what people are thinking right now, what a lot of things are saying on the news, is that mining is really bad for the environment because it uses all this power. But I would say that using money as a weapon, going to war, not letting the US or not letting other countries use other than the US dollar to transact in certain commodities, like this stranglehold that we have on the world is not good for climate, period. So I would say that Bitcoin, using the power of a small country to secure its network, is a feature, not a problem, for sure. That's a secure, decentralized network you can choose to be a part of and get away from this tribal thing that's going on here.
Yeah, like the Suez Canal got blocked. It's like, well, because the problem is everything's going through the Suez Canal.
Well, that's what Ethereum is right now. Ethereum's got this block and we got to pay a bunch of fees to use it, but it's still cool.
It's okay. So now would be the time maybe to buy Ethereum and just don't move it. But I don't know. Don't do what I'm doing. Don't keep it on Coinbase Pro.
People are so pissed, but it's like the fees are high on Ethereum because people are using, not because they're not using.
Yeah.
And they're using DeFi and there's a heavy risks you can take with DeFi, but like I said, you can lose it all. You can lose all your money in crypto. That's 100% something you gotta, you know, if Joe Biden decides to ban it, then people will sell. The problem is you can't ban Bitcoin. Like you can't. No government can ban Bitcoin. They'd have to turn off the power. Help build the infrastructure around it if you want to be a part of it.
Well, that's kind of been the run on Bitcoin, is like the world players are starting to say, we want part of this too.
Absolutely. Mark Cuban, Elon Musk, MicroStrategy.
Elon Musk, our new neighbor.
Oh yeah, Elon Musk, our new neighbor. I was like, yeah, totally. No, he loves
our new mayor.
Yeah, he loves it.
Players are coming in. Even Motley Fool was like 5 months ago saying Bitcoin sucks, and now they're like, oh, we just bought 5 million.
Yeah, JP Morgan. And that's the thing about these big time banks, like, don't look at what they say, look at what they do. Go to their company, try to figure out what it is they're investing in, because a lot of times they're sending out FUD because they want your Bitcoin. They want it at a cheaper
All right,
price.
so tell what FUD means.
Yeah, fear, uncertainty, and doubt.
Mm-hmm.
They want to spread that. They don't. I mean, look at just a couple of years ago. Go read J.P. Morgan. Go read Warren Buffett. They called it rat poison. You know, J.P. Morgan says it's crap. You know, but when they do the research, it's like now it's just becoming riskier to hold cash. Now it's becoming riskier to not hold Bitcoin. And it's not so much that Bitcoin's going up in value, it's that the US dollar is going down in value. And that's why it's going to take, because if you think of it, forget Bitcoin.
Okay, yeah.
How much are you paying for a gallon of milk now? You know, you're paying, you know, $7, $8, $10 for a gallon of milk.
Mm-hmm.
Is it because milk is less available than it was? No, milk is more available. Meat is more available. Things are more available. There's enough food on this planet to feed everybody on the planet. But the US dollar has gone down. Things have gone more expensive. They print $6 trillion at the drop of a hat. They don't print any money. They literally press a button.
Mm-hmm.
And they said, I think they were saying something like, if there's an infinite amount of liquidity, there's an infinite amount of money they can print out. They're not going to let this market crash. Now, that's the thing about the stock market is you look at it, and it's going up.
Mm-hmm.
In a worst economic crisis, pandemic, all these things, the market's going up.
Mm-hmm.
It's artificial.
Mm-hmm.
You know, so you have Bitcoin, it's highly volatile, but that's organic. That's retail investors. That's people like me and you, like wanting to get out, wanting to keep our value, keep the money that we have. And the thing about value is crypto is going to bring a lot of individual value to everyone. Mm-hmm. So you create art or anything at all, music, whatever like that, you're able to immediately share it. You catch a vibe, you catch a flow, you know, you got an ecosystem now, you got communities, you got people, you know, and are easily transacting money with you. They're just going to send you Dogecoin or whatever you want to, you know, tip you. You know, I use Brave browser right now. I get basically paid to look at ads. You know, Brave browser, super cool. Things are going to be have value attached to them.
And then to end on it with your crystal ball, what are things going to look like in 2 or 3 years? What could be possible?
I would say take a look at gold's market cap, and that's pretty much where we should be with Bitcoin pretty soon. There's going to be a lot of dips on the way. You know, dollar cost average your way in. Mm-hmm. Learn more about it. Bitcoin for me is going to be the common language across the network. You're going to be able to transact in it with anybody, and all these other cryptos are going to be things that you can use for specific reasons and also transact as currencies. But yeah, acquire Bitcoin. It's the gold. It's the new digital gold.
I love it. Bitcoin, here's the gold. Ethereum, here's the oil.
Yeah, and Bitcoin doesn't need to be fast. Anybody that has that thing where Bitcoin's slow, Bitcoin's this, but Bitcoin needs to be sound and secure. That's all it needs to be.
Thank you so much. I love talking to you. We're going to do it again. I'll talk to you soon.
Decentralization. That's the key. 100%.
All right. Bye, Carlos.
All right. Have a good day.
You too.